Hi friends, please let me know if you're able to hear me. Yeah, can someone please confirm whether you're able to hear me? Am I audible? Okay, great. See, basically today's session is on the basics of options. You know, right? Options is a very complicated topic, so I'm not sure like how I'm going to cover this, but I'll do my best in terms of covering all the basics, like your typicals, what is CE, PE, what is C buy, what is PE sell, a very high level on the delta, what are all the ITM, ATM, OTM options. We'll discuss about the risk to reward, and then what is open interest, what is theta. Right. By the time other people join, so let's. This is the agenda for today. Okay. So we have 18. Let's wait for another 2 minutes. So before that. So let's try to cover like what is POP. So basically what I meant to say is like we will try to cover the payoff of the obstra or sensible. So just in case if someone want to go into options, right? So you need to be aware of all these little things. What is CE? What is PE? Delta? What are the ITM strikes, ATM strikes, OTM strike? What is your maximum profit? What is your maximum loss? How to calculate the maximum profit and maximum loss? What is your break even? If someone is planning to go for any strategies, you should be aware of what is the break even. Without the break even, I mean, don't even trade actually. Okay, what is the POP? How does this POP plays a critical role into your strategies? What is option chain, right? What is the strike? What is the premium? How is the premium built upon? Right? We are going to talk everything in the practical way. We are not going to talk all about the theoretical, wherein we will talking about options is obligation, right? What is that contract and everything? So no, we are going to discuss everything uh, on a very practical oriented. And again friends, the other thing is like, I mean, this session is for everyone. This is not for the paid members, meaning I'll tell you, right? Again, don't get me wrong, this session is for basically for everyone. Okay, so the reason why I'm doing this session is like, see, you know, right, I'm about to start a session on November 6th on the what do we say, this one, hybrid traders, non-traders and adjustments. Basically we are going to start a paid mentorship on the options, and I got many emails from many of the paid, and also I used to get like many emails from other folks saying that we are like very new to the trading, so we need to know the basics of the options. So net what I'm targeting is like, maybe this session is very useful for the people who are going for the paid training, and also for new traders who want to join my batch, next batch or the third batch, right? So definitely these basics are required. Apart from this, I mean, I'm going to come with another program which is what is that, one second, yeah, regarding the swing trading. Okay, so we will add some basic sessions for the swing trading also, but today we are going to target, majority of the time we are going to target about the basics of the options. Okay, so right away let me take you to the sensible. Okay, so we have 30 participants. So are we okay guys? I mean, are we good to go for like basics on the options? I'll show everything practical, no theory, everything will be practical, and I want it. And please do not type any questions. You know, right? When I go into flow, I don't even look at the Q&A. If required, I'll ask you, because this is like more of practical, right? So there is no point in you asking the question. So let's see. Like today, we'll just try to cover everything. If you have some time, definitely I'll open up the Q&A session. Okay. So now, see. Let me take it to the sensible, right? I'll take two tabs. So basically, whenever we talk about the options, right, I'll not even start with options or obligations, contract. I mean, we talk about so many examples, right? See, basically, what I meant to say is like, right? We see. Let's say we will talk about the upside moment market, right? That is very easy, right? Just take an example of market is going upside. So what we will do as a option buyer, what you'll do first, we'll take an example of OTM. Okay, so I'll go to bank nifty. This would be like very easy. I'll go to bank nifty. It's, do not ask any questions and please stay focused. Okay, so now my view is market will go up. So what I'll do, I'll just try to buy this one. Okay, I'll just try to buy maybe like going like 2 to 3 this thing. I'll buy this. Okay, I'm buying 41,300. Okay, let me. So this is a new feature, friends. I don't think this is required for now. I'll just disable it. Okay, so what I've done, I've just bought a call for 41,300 strike. I bought a call. Market is trading at 41,100. Again, I'm showing you. This is very important. Market is standing at 41,000. We went like 3 OTM strike, right? 3 strikes OTM. I bought this. Now what I'll do, I'll take you to the other screen. The same thing, I'll sell it. That's it. Okay, 41,300. I'll sell it. Okay. Now, okay, let me uncheck this one. Okay. So now if you look at this one, your loss, see the moment, see there are like 2 tabs, right? The left tab is for buying, the green tab is for selling. All right. If you look at this thing, your maximum loss is 2,455. Okay, and so simple, try to understand whatever benefit the option buyer will have, that will be like negative for the option seller. Whatever the option seller benefit will have, that will be negative of option buyer. So now your maximum loss as a option buyer is 2,455. As a contra, the same thing is the profit of the option seller. Simple. Here it says unlimited profit for option buyer. Okay, but here it says unlimited loss for option seller. Okay, point number 1. So we are just discussing about it. Now, you know, right, there is a myth in market saying that option seller has the edge. Okay, option seller has the edge on option buyer. Okay, let me take you one, let me give you one example. Okay, this will say, I'll show you everything in a practical oriented manner. Okay, so let me take you to this one. Okay, now so let's say we have a buyer, we have a seller. Okay, let's say this is the current market price. Let's say the current market price is what, 35,000. Let's take it as 35,000. Okay, and now you are bullish about the market. Okay, you are bullish about the market. So what you will do, you will go some OTM strike. So let's say you are selling 35,800. Let's say, sorry, buying 35,800. You are buying. You are a buyer. You are buying 35,800. The current market price. This is CMP, current market price. Okay, this is the current market price, and you are buying 35,800 by going 300 points. Now, there could be like 5 scenarios, right? There could be a 5 scenario. I'll just explain you why the option seller has the edge over the option buyer. I'll prove you, and at the end of the day, right, you should think, right? So there are like 5 different permutations and combinations. You are a seller and you are a buyer. End of the day, if a buyer wants to buy, there should be a seller. Okay, without seller there is no transaction. If a seller wants to sell something, there should be a buyer. That's it. Options are, that's it. A buyer and a seller. Do not even get into all those complicated terminology like it's a contract, it's a what is that? Obligation. Nothing. I mean, just think that if you want to buy, you need a seller. If a seller wants to sell, you need a buyer. So we will talk about 5 different market conditions, right? If let's say you bought 35,800. Okay. For your safety, what I'll do? For your safety, I'll do. Okay, I'll put that 35,800 here, or else you'll get confused. Okay, you are buying 35,800. That's it. All right. So now, market number 1, scenario number 1. What if the market goes down from 35,000? It goes to 34,900. Okay, you will lose here. Buyer will lose here. Right? Buyer will lose here. But seller, as a contra, seller will win here. Okay, I think I'm just starting with the basics and then we'll try to cover, right? Stay with me, friends. Scenario number 1, let's say market is standing at 35,000. You bought 35,800 with an intention of market will go up, but market is falling down. So you will lose here, right? Seller will win here. Second thing, let's say the market stands where it is. I mean, you bought when the market was standing at 35,000, you bought 35,800 and market expires at 35,000. You will lose here. As a buyer, you will lose here. As a seller, you will win here. So check the permutations and combinations. Check where is the edge. So seller has the 2 edges. We are going to discuss about 5 different market conditions, and you will check, right, where why do we have that edge on the seller. Let's say market went up, right? This is 38,000, 35,800. Let's say market expired at 35,600 or 35,700, let's say. All right, you will lose here. As a buyer, you will lose here because market has to go above 35,800 because your break even is 35,800. Current market price is here. Majority of the buyers, what they think is that the moment they buy, even what they think is, even the market makes 35,100, they will think that, sorry, this is 35,000, right? Okay, my bad. This is 35,000. Let's say 35,500. It's a very huge gap. Okay. Okay, 35,500 and you bought 35,500, my bad. So what majority of the buyers, what they think, like the moment they buy 30, when the market is 35,500 and the market goes to 35,600, they will think that they are going to get the profit. No, because your break even is 35,000. When your break even is your what do you say, strike is 35,800. Market has to go above 38,500. Let's say the market expires at 35,700. Which is below less than your buying price. So as a buyer, you will lose here, but as a seller, you will win here. So 4 areas, he has won. Seller has won at 4. What do I say? Combinations. Buyer has lost. See, he has lost here 1, 2, 3, 4. What all we discussed? Market goes down, he'll lose. Market stays as it is, he will lose as a buyer. Market expires between maybe at 35,700, he will lose. Even if, third condition, even if market goes and expires at exactly at 35,799, let's say 35,799, fourth scenario also will lose. Okay, but as an option seller, he will win. So out of 4, you have as a buyer you are losing 4, and as a seller you have won 4 times. Now let's say fifth condition, let's say the market went up, market has crossed your 35,800 and let's say market went to 36,000, let's say 36,000. Okay, so now in this situation the buyer has won. That's it. So this is the edge word. So now the buyer has won because this is the only area, because 35,800 is bought. So now the market is at 36,000. So buyer will win here. But all the 4 conditions, fifth condition is win. But the takeaway for the seller would be, right, what I would say, right, seller is not going to lose here, but he has a cushion basically. Just try to understand. If I'm making it very complicated, you can watch one more time. Fifth scenario also, seller is not going to lose. You will be surprised. Right, seller has sold 35,800, but this guy is telling even if the market goes above 35,800, how come seller is not going to lose, right? But there is a cushion basically. So whatever premium the seller has received, let's say the seller might have received 100 rupees premium. I'll show you everything practical. First I'm showing you practical. Let's say that the seller might have got 100 rupees premium. So from 35,800 to 35,900, the seller is not going to lose a single penny because he has already received 100 rupees premium. So from 35,800, this is 35,800, right? Till 35,900, let's say this one, he is not going to lose a single penny. Only when the market goes above 35,900 is unlimited loss will start. Got it? So even the seller has an edge over here. Meaning, even though the market goes above his strike price, the strike price what he has sold, until the premium, whatever premium he has, let's say 35,000 plus the premium, whatever premium he has received, that is the break even for seller. So until that break even, the seller is not going to lose a single penny. He will be either at break even or else he will be at profit. Let's say 35,800 is sold. If market stands at 35,850, still he will be in profit, but not maximum profit, but he will be getting limited profit. Only the loss will start only when the market goes above 35,900. Guys, tell me one thing, are you guys with me or not? Okay, just give it a thumbs up or yes. Or is it too complicated? This is only the theory, and now I'll take you to the, I'll correlate everything with the practical. Okay, I'll take you to the sensible now. Alright, so before that, can you please let me know if you are okay so far, or is it like too complicated? maybe especially all the new traders, especially all the fresh traders, I mean, you guys have to tell me. If you did not understand the video, pause, I mean, maybe you'll get this recorded session, you have to watch one more time. That's it. This is all about option buying. Believe me, this is all about option buying. Don't overcomplicate it. So all the 5 conditions I've shown you, I'll show you everything practical now. I'll show you everything practical now. Okay, let me delete this. Right? The same example I'll take you. Okay, now see, first, right, let's take an example of, I bought 41,300. So we were discussing about the break even, right? So now let's talk about the buying only. Let's talk about only the buy. Okay, let me show you. This is going to be like very interesting, friend. Okay, any understanding? Okay, good. Okay, so far now, if you bought 41,300 when the market was standing at 41,100, check your break even, friends. Check your break even. Your break even is this one, right? I'm highlighting your break even is 41,392. How did you arrive this 41,392? Simple, friends. This your strike 41,300 plus whatever premium you have given. That's it, right? When you have this recorded session, you pause the video and do that's it. 41,300 plus the premium what you are giving to the seller. That is your break even. That right? 41,300 plus 98 is your break even. So what does this break even indicate? Meaning, you will be getting into profit. Your profit will start only when the market reach 41,398. That's what you see. You see this red color. Right? This red color line is your loss area. The profit will start from, see, 41,000 something like 390 is where your profit will start. Let me zoom this. You'll be able to understand. So this is your break even. Right, this is your break even. What is it? 41,000 or 398. But again, I think there might be some smart trader who will think that this is wrong basically. So in a way, it is wrong basically saying that your profit will start only when the market breaks your break even. No. I'll tell you one thing. This is Thursday, right? I'll reset. I'll take you to today. I'll take you to today because the payoff which is showing is this one. It is showing. It is by default calculating Thursday. So I'll get it to Wednesday. I'll get it back to Tuesday today. Okay. Now check the beauty. Now this blue lines plays a very critical role. What did I say? As an option buyer, it doesn't mean that only when the market goes 41,398 your profit will start. That is absolutely wrong. Because as an option buyer, what you need is the quick momentum. So let's say tomorrow, the market goes like by 1%, right? Your break even is 41,000. Let's say round figure, right? 41,400. Your break even is somewhere here. But tomorrow, if market makes a move of 41,300, which is less than your break even, try to understand, friend. I'm not trying to make you complicated. Yeah, maybe for few it will be like complicated. Even though your break even is 41,400 here, but still tomorrow market makes a move of 41,300. What did I say? Tomorrow I said Tuesday, right? You will still get with your profit. That is 1,645. Are you with me? Right? Initially, what did I say? The buyer profit will only start once is break even is reached. Yeah, this one is only. If you look at this, let's say tomorrow market makes a, let's say it makes a move of 0.5%. Okay, 41,300. Let's say 41,300. Check the black box. There is something called the profit shows 1,645. 1,645 on 25th Tuesday and. Okay, voice is echoing. Is it fine now? Yeah, let me know if it is fine. Maybe I was very close to mic basically. Yeah, let me know if it is fine or not. Can someone please confirm? I'm not sure why the voice all of a sudden it gets echo. Still is it echo? Okay, let me check. Let me give me a second. Let me check if the other thing is on. Okay. Is it okay now? Yeah, my bad. There was one video. Is it
Is it
fine
fine
now?
now?
So I've
So I've
just
just
unmuted the
unmuted the
other
other
one.
one.
Yeah,
Yeah,
is it
is it
better
better
now?
now?
Okay,
Okay,
what is
what
the
is the
other
other
system?
system?
One
One
second.
second.
Right,
Right.
this I
This I
will
will
close.
close.
This
This
is
is
one.
one.
For the cable
Cable
research. See,
research.
I
See,
have
I have
only
only
one
one
system,
system,
but
but
strange.
strange.
Yeah,
Is
is
it
it
is it
okay
okay
now?
now?
If
If
still
still
you are
you are
able
able
to
to
have
have
echo,
echo,
I'll
I'll
change the
change the
mic.
mic.
I
I
think
think
now it
now
should
it
be
should be
okay. I
okay. I
believe there
believe
was
there was
one
one
video
video
playing.
playing.
I've
I've
just
just
made
made
it
it
pause.
pause.
Is it
Is it
is it
is it
still
still
still you
still
have
you
the
have the
issue?
issue?
My
My
bad.
bad.
Okay,
Okay,
let
let
me.
me.
But I
But I
think
think
now it
now it
should
should
be
be
okay. I
okay. I
believe.
believe.
Okay.
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 Let
Let
me
me
plug in
plug
the
in the
other
other
earphone.
earphone.
Okay.
Okay. Yeah. Let me know if it is audible now. Can someone confirm if it is audible now? Not sure. Like what is the issue? I've just changed the mic. Is it audible? Or still you have some echo issue? Okay, Hari Krishna has confirmed. So we are okay, right? Yeah, it's okay now. So look, sorry for the inconvenience. So where were we? Yeah. So basically, what were we discussing? Okay, okay, fine. So sorry for the inconvenience. Yeah. So what I meant to say is, so whenever it's not a ground rule saying that the option buyer will be having profit only this break even is breached. No, friends. If you look at this, yeah, we were discussing about, right, 41,300. Okay. Okay, 41,300. Okay, so now check the black box. You have Tuesday 25th as 1,645, and on expiry day you see a loss of 2,455, right? So there is a small catch over there. Okay, so when the market expires here on the expiry, you will have your maximum loss. Straight, simple. But tomorrow or today, I'm making the video on the closing, but tomorrow, let's say the market gives you a quick momentum of if it goes to 41,300, you will get with the profit of 1,645, right? This is very important, friend. This is very important. You have to know the break even. Majority of the buyers, what they think is like, okay, when I go for the option buying, I'll get my profit only when market goes to 41,400, which is my break even. That is only, that is applicable for your expiry. That is applicable for your expiry, but not for the next day. Check the blue line, right? Your blue line will give you the difference, right? Whenever your blue line breaches your vertical line, this zero line, right, you will get into profit. So okay, we will anyways, we will discuss everything into the upcoming session, but you got the point, right? So there is this is one of the myth of the market saying that sorry, majority of retailers think that whenever I go for option buying, I'll get into profit only when this break even is breached, which is absolutely wrong. Yes, this stands on the expiry. Point number one. Now let's check over the expiry. Let me, so even if market expires here, you will get a loss of 2,445. Simple, right? Even if the market goes down, your loss will be 2,440. We are discussing about five scenarios. What did I say? Market staying flat until your expiry. Check the expiry date, your loss is maximum. Market going down, even if I want I can show you by simulating, but market going down, you will have your maximum loss. Market went up until maybe on your expiry, market expired at let's say your break even is 41,398, right? So let's say your break even is at 41,300, you will get into your maximum loss. I'm talking about the expiry, right? From this place till this place is your minimum loss, right? You will not get, because the premium what you have given. But your profit will start only when market goes above 41,398, this break even. So now your profit will become unlimited. Okay, so we have seen all the 5 conditions. I think you'll be not able to get it now. Once you get the recorded session, you can pause and play around with the video. We have discussed about the 5 combinations. Now let me take you to sell position, right? I'll zoom this out. Okay, I'll zoom this out. Okay, so what did we say? If market goes down, you'll get into profit, right? Contra of the buyer, yes, you'll be getting, check the black box. If market stays here, you'll be getting your maximum profit. If market stays flat, you'll be getting maximum profit. What did I say? Even if market comes till your break even, you will get your, see, this is call, right? Whenever we are selling call, guys, tell me one thing. Whenever we sell 41,300, I wanted to get a response from everyone. So when we say, when you're selling 41,300, can you say that you're bearish about the market? I want everyone. You are selling 41,300 call. Can you say that you are bearish about the market? I want to hear, I mean, yes or no, that's it. Yes or no. You are selling 41,300. Is it feasible, viable to say, or logically correct to say that you are bearish about the market when you're selling 41,300? I want to hear from each and everyone. At least say yes, no. This is very important. This is very important. See, I mean, I'm not sure like how I have to capture everything, because already I've done many videos. I'll be sharing all the videos with you. Someone said yes, Pradeep said yes, Lakshman said no, Rajshekhar said yes. Fast, fast, friends, fast. I mean, not really. Shankar is very diplomatic actually. So neither he says yes or no. Yes. Lata says yes. Sagar, right, right. Majority of the folks are wrong. Whoever has said yes, right, you are absolutely wrong. Believe me, you are absolutely wrong. See, whenever we are selling 41,300 call, right, you should not say that market is bearish. Your view is market will stay below 41,300. That's it. That doesn't mean that market is bearish. What is 41,300? Even if market goes to 41,299, that's what you're telling. Market will not breach 41,300. Market will not go above 41,300 is your view. That's it. You should never say that market will be bearish, right? This is one of the wrong myth in the market. Your view is 41,000, market will stay below 41,300. That is, it is not going to breach this 41,300, but that doesn't mean that you are bearish. And what is, even if what 41,000, let's say 290, if market, right, this can be your view. So does that mean for 10 points do you think market will be bearish? This is absolutely wrong, friends. Believe me. This is absolutely wrong. Many of the YouTubers will say, but majority of they say they no. Whenever you sell any call, you should not be saying bearish. You should say my view is market will not breach 41,300. That's it. That doesn't mean that market will be bearish. Hope you got my point. All right. Now, let me take you. Now, see, what did I say? You will have a question. You will have a question. See, what did I say? Your break even is 41,000. Same thing, 41,398. Okay. When the option buyer's profit starts from 41,398, right? 398. So the option seller's loss should start from 41,398. Are you guys with me? Ideally, yes. Logically, yes. Technically, yes. Because when the option buyer's profit starts from the break even, you have the same break even, right? You as a seller, you have the same break even. As a buyer, you have the break even. This is the buyer screen. See, this is the buyer screen. I'm just tapping on the seller screen. Seller also has the 41,398. But let me show you one thing. Right? I'm not sure how many, right? So where is your break even? Your break even is this point. All right, this is your break even. Let me show you by overing the mouse also. 41,300. Okay. Now, see, sorry, what I meant to say, see, you sold 41,000. Yeah, my bad, no, not. You sold 41,300. So what did I told you? Even if the market goes above 41,300, everyone will think that this will show you your loss. But see, your break even is 41,300. But what is this extra green area? What is this cushion you are getting? Even though market goes to 41,340, you're not at all having any loss, but you sold 41,300, right? When buyer has bought, see again, I think I'm not complicating. When buyer has bought 41,300, your profit will start only when the market goes above 41,300. So in that case, when the seller has sold 41,300, his loss should start the moment market goes above 41,300. But do you see the loss? This is your 41,300. You have a safety of almost like 90 100 points. Even if the market expires at where 41,380, but still you have profit, because this is the differentiator, right? That's the edge, the option. Because what did I say? You are getting 98 rupees as the premium. Okay, though you sold 41,300, your break even would be 41,300 plus 98. The same logic what we have used for option buying. But your loss will start only after 41,398, though you have sold 41,300. I know for few people this will be like complicated. Even for me, when I started the options, it almost took 3 weeks for me to understand what is call buy, what is call sell, what is put buy, what is put sell. I can understand. Keeping that in mind, I'm just reiterating many times. If you're not able to understand, pause the video, because I've seen all the theoretical videos. For that reason, I could not understand. Believe me, friend, I'm showing you everything practical. No, I mean, wrong to say no one. Majority of the people will not show all practical. They'll just take an Excel sheet, they'll just take a PPT, and they'll say if market goes like, say, I'm showing you everything practical. Okay, let me delete this thing. Okay, so though your break even, your sole position is 41,300, you have a extra cushion. That's the edge the option seller will get. If market goes below 41,300, he'll get his full profit. Even if market stays as it is, he'll get his full profit. Even if market goes up till your break even, he'll get full profit. Scenario number 3. Even if market makes a down circuit of 10%, he'll get his profit. Even if market goes above 41,300, he'll have a cushion of this 98 rupees. He'll have a cushion of this 9 because he has received that premium. So his loss will start only after 41,398. Okay, this is the extra cushion what I was talking, but this cushion is not there for option buyer. Okay, let me show you. Option buyer doesn't have this cushion, because check this. This cushion is loss. This red area is loss for option buyer. On the expiry, market has to cross this 41,398 for him to see the profit. But whereas for the seller, he has this extra cushion. And tell me one thing, friend. Tell me, even I wanted to hear from you, right? Tell me one thing. This unlimited loss, is it really unlimited loss for a option seller? Let's say, market makes say upper circuit of 400 100%. Let's imagine, because the option seller has sold 41,300, his view is market will be not bearish. His view is market will not go behind 41,300. So let's say tomorrow we have a upper circuit of 100%. So do you think option seller has to pay all those unlimited loss, because he's end of the day is paying only 1,41,000. So let's say tomorrow we have a upper circuit. Let's assume we have a upper circuit of 100%. Do you think option seller has to bear all this loss? Okay, let me show you, right? Let me show you. I'll take you to I'll take the market to let me check. I'll take the market to 10, 20, 30, 40. I mean, let me. Before that, I want answers from each and everyone. Do you think the option seller will have really unlimited loss? Let me show you. If this works or not, I'm not sure. I wanted to hear from everyone. Do you think the option seller will have unlimited loss? Okay. See, if I'm overing my mouse, let's say tomorrow the market has gapped up by 36%. Let's say, hypothetical example, right? You will have 3,91,000. You will have 3,91,000 as a loss. But the seller has only given 1,41,000. So who is going to bear the remaining 2,50,000? Who is going to give that 2,30,000? Let's say you as a buyer, you bought this. Tomorrow, let's say tomorrow, let's say literally the market went like almost like that 36%. So you should get a profit of 3,66,000 ideally, technically. But do you think the option seller will give you the 3,66,000? Because is unlimited loss is only 1,41,000. So who is going to bear that remaining 1,50,000, 1,60,000? Now tell me, right? Does the government is going to pump in the money, right? This is not ideally, this is not a feasible case, but who knows? Who knows? I mean, I'm showing you the I'm showing you the upper side, but downside circuit is there, right? 10%, 15%, right? I'll not even answer this. I'll not even answer this. You have to get the answer, right? This is not realistic, but I'm still showing you one example. So this is not always saying that unlimited loss, right? Simple, guys. Simple. If I'm an option seller, I will not even wait till this 1,41,000 loss. If my loss is like, let's say 10,000 or 20,000, right? So what I'll try to do as a option seller, if I want to exit my trade, what I have to do? I have to buy back, right? I have to see. What do we say? Whenever we have this sell, to exit, we will buy it. Okay. So let's say out of this 1,40,000, my loss is like 20,000. That's what the 20,000 is the maximum loss I can bear as an option seller. What I'll try to do, I'll exit this position. So if I want to exit this position, I want a buyer, right? So this is how the market, so that's a wrong myth of the market saying that as an option seller you have to bear all this maximum loss. I think I'm not able to I'm not sure whether I was able to convey, but this is not a very important, but I'm just telling you all the myths of the market. That doesn't, if it is an option seller, it doesn't mean that he has to give all this loss. Out of this, if his maximum loss capability is 20,000, so if this trade is giving that 20,000 loss, he'll exit this. For exit, you have to buy. So again, there comes the what? The buyer, the new buyer, the new seller. So then he will take it, carry forward. But that doesn't mean that he will be getting into unlimited loss. That is one of the wrong myth. Like people have made it very complicated. This is not, even we have unlimited loss in the equity also. Just in case if you go for equity, if you have 10%, 20%, does that mean that equity doesn't have the unlimited loss? Intentionally, I think all these big players have made options very complicated, saying that options is unlimited loss, but you can control your strategy anytime. You can control your strategy anytime. Even equity is exposed towards unlimited loss. Even your futures is exposed towards unlimited loss. The same thing, right? Though your option says unlimited loss, but still you have the mechanism in terms of making it limited. Your swing, your futures doesn't have any adjustments strategies, but your options at least you have adjustments in terms of mitigating the loss. Okay, now, okay, so I think so far, are you guys with me so far, or is it like too complicated? Right, I wanted to just show you all the wrong myths about the market, right? We have seen like all 5 different market conditions between option buyer and option seller. How is this going to help you? Stay with me for another 30 minutes, you'll get to know. Though this all are basics, though all these are basics, but these are mandatory for you to know, because you see by this time, you have seen like what is break even, right? You have seen what is your maximum profit, you have seen maximum loss, you have seen unlimited loss is not at all feasible for the option seller, though it says unlimited, but that is not unlimited loss. As a option buyer, you have seen right, strike, we have seen about this premium, we have seen about this strike, right? What is this strike, and what's even, this is your market stands here, but you are buying this thing, you went like 300 points and everything. So are you guys so far with me? Anyway, we have to bear the extra money. So okay, so now let me go back to the slide. There are actually, so what all things we have discussed, and there are like too many things to discuss, friends. There are like too many things to discuss. Okay, let me Yeah. See, now this is going to be like very interesting, right? This is, see, because I've already made a video, and again I wanted to discuss with you, right? See, basically this slide you should take a picture and stick it onto your machine or your desktop or your trading zone, anything. This is one of the very important. Without having knowledge on this slide, you will not become a successful trader. Okay, so this is what I wanted to explain. I wanted to spend like 2 minutes on this. There is something called, see, many of the option sellers, the big FIs, they use this technical jargon like call writing, call unwinding, put writing, put unwinding. This is technical. Even I had a very difficult time in terms of understanding all these things. So I came up with this, what do we say, this PPT. Simple, friends. There is something called price. This is premium. When I say price, this is premium. This is open interest. I'll show you everything practical. I'll show you everything practical. And if you are able to digest this, your trading will become very easy. All right. So now when the premium price is decreasing, let's say you have the premium price rates, be it on the put side, be it on the call side. Now tell me, as a option seller, either I'm selling a call or I'm selling a put, should the premiums decrease or should the premiums increase? Again, I'm repeating, as a option seller, I am selling either a put or a call. What the option seller requires, is it a premium should decrease or premium should increase? Tell me one thing, this is very important. Premium should decrease or premium should increase as a option seller? Quick, fast, friends, fast. As a option seller, premium should increase or premium should decrease for you to get into profit? Vishnu says decrease, Sagar says decrease. I'll show you break even, max loss, everything. I'll show you. Guys, first focus on what I'm asking. I mean, I'll ensure that I'll cover everything. If required, we'll have one more session. Everyone says decreasing. Yeah, everyone says decrease. Anyone can give the correct answer? All are wrong actually. Everyone are wrong. Everyone are wrong. Whoever is saying decrease, they are absolutely wrong. Because we are talking about option sellers. Thomas is saying decrease. Vincent is saying decrease. I think everyone are wrong. Someone who says premium has to increase, someone has to correct everyone. Okay, chalo, let's then at least in that case I have very good audience, so it is easy for me to explain. So now, see, basically I'll tell you one small secret, friends. I mean, this will definitely help you. This will definitely help you. So how to know whether the call writing is happening or the call unwinding is happening, whether the put writing is happening or the put unwinding. Whenever we say call writing, right, again I'm telling you, people are not bearish. Wherever you see the call writing is happening, that particular strike, whoever bought that, whoever sold that strike, so they are with a view of market is not going to breach that strike. That's it. You should never say bearish. Yeah, overall we can say that if you take like 10 strikes, if you have more call writing built up versus 10 strikes on the put, if you consolidate both, so then you can say, okay, market can be bearish or market can be bullish. But at the individual strike rate, you should not say that market can be bearish. Your view should be, if you sold a call, you should say market cannot breach that particular strike. If you are selling a put, you should say that market will remain above this strike. Market will not come below. That doesn't mean that market will be bullish or market will be bearish. Got it? So now this is one of the formula what you have to. So whenever there is huge call writing, so this is what happens. Meaning, whenever there is a huge call writing, the premiums will start decreasing. The open interest will start increasing. Got it? Whenever you see the premiums are decreasing, I've already made this video. You can watch this 23 minutes video. I'll put them in the description box. I'm just giving you a very high level. If I want to explain everything, it will take more time. So whenever the premiums are decreasing and the open interest is building up, so that means market is going to be bearish. I'm not talking about individual strikes. Wrong to say bearish. I'm talking about all the majority. Ideally, yeah, ideally you can take. Whenever the premiums are increasing, this is the contra. Whenever the premiums are increasing and the open interest is decreasing, what does it show? Whenever the premiums are increasing, whoever has sold the call, so they will definitely unwind their position, right? Because they want premiums to come down, but premiums are going up. What does that mean, right? What does that mean? So that is going against the option seller, so the open interest will start decreasing. Because let's say there are like 100 people who went for call shots, let's say 100 people. Okay, this is difficult, maybe for a few people it will be difficult, but let's say there was 100 people, right, who went for call selling. Suddenly the call, why do we go for call selling, right? This particular strike will not breach, so market will stay below this strike. Suddenly the market is going up, so now do you see more of open interest getting built? Obviously, right, this 100 will become 50. That means 50 people are unwinding their position, meaning they thought market will be like below that particular strike, but market is going up. That as a result, the premiums are increasing, so they will start squaring off their position. I mean, this is a vast topic, right? Because I've made already 23 minutes video. Watch this video without fail. Okay, this let's say there are like 50 people who went for, let's say, let me take another example. 50 people went for call selling. Okay, premiums are falling down. What does that mean? Premiums are falling down. Whatever strike is sold, so market is below that strike. So now either if you're there, right, you will increase your quantity. Either you will increase your quantity, or other people come and even they will sell that particular strike because they think that particular strike is very. So now another 50 people will add up here, so that's the reason your open interest will increase here, right? Because premiums are coming down, your open interest going up, so that is market will be bearish. Premium is going up, at the same time your open interest is also decreasing, right? Market is bullish. That's it. Because, and as a contrast, same thing, right? If you are selling a put, premiums are coming down and the open interest is building up, so then you are bullish about the market. Same thing, right? Premiums are going up, open interest is decreasing, you're bearish. I'm sure like maybe 30 to 40% people might have not understood, but pause maybe once you get the recorded session, or else you can watch this video, 23 minutes of video. That will be like eye opener video for you, and this is one of the bible for me. Okay, let me show you one practical example.
The
Okay, let me show
options.
you one practical
Okay.
example. Let me take you to this thing, right? I'll take you to the sensible what do we say, your NSE option chain. Okay, let me know if you guys are able to see my screen, the NSE option chain. Okay, so I've selected Bank Nifty for 27th October. So I'll show you one live example here itself. Okay, I'll show you the live example here itself. Right, you guys are able to see my option chain, right? Okay, so this is your ATM. Okay, so maybe these 2 points, these are two of your ATM strikes. Okay, this is your put side, this is your call side. All right. Okay, so this is your put side. Now what did I say? There is something called change in open interest. This one, change in open interest. You have change in open interest here, and you have something called open interest. You have open interest. That's it. See, what I meant to say is like this entire area, this entire zone is the open interest, open contracts for this expiry, right? This is you can in a nutshell you can say that this is the outstanding open interest. Okay, this is the outstanding open interest. And what is this change in OI? Change in OI is like today, I mean, there were like changes. Either someone have, there was a call. See, I'll tell you, this is the today's open chain, open interest. If you look at this thing, this is outstanding so far. I mean, how many contracts are open for the 27th expiry? Point number one. And this is the change in open interest. This box is for today, right? How many? What was the change? Okay, so now let me take you to call side. Same thing. This is your change. This is your outstanding open interest. for the 27th October, and this is your open chain entry. So now let me show you. So can you guys check and let me know whether, one second, right? I mean, see, this is typical subject. I'll do my best. Okay, so can see, if you look at what did I say, focus on the change open interest. See, there were unwinding. If you see this minus symbol, see guys, are you there? I mean, you're able to see my screen, right? Can someone please put yes, no? Are we still there, or did we lose the connection? Because there is no yes, no from you guys. Even my, you guys are able to see my screen, right? Option chain. Give me a second. Okay, okay. I thought for a second, I thought I lost you guys. Okay, yeah. So now, if you look at this, there is something called minus here. So what does that minus mean? So now there were like unwinding. People who went long, right? This is put side. This is put side, right? People who went for short, so they started unwinding their position. That's the reason. See, that's the reason you see this minus. This strike, people went unwinding, right? This side people went unwinding. Even you see this are all the strikes which people went unwinding. Because how was the market today? How was the market today? But right, markets gave a gap up and then market came down, right? Now check at the call side. Check at the call. Do you see any minus symbol on the change in open interest side? Do you see any minus? No minus. That means there was not much unwinding on the call side because market was bearish today, somewhat bearish today. So that's the reason you're not looking any minus. So that means people started creating more open interest and all this strike price. But check at this thing, right? Only 16,000 minus, right? Or unwinding only 6,000, 5,000, 1,000, right? Unwinding minus, minus, minus. But check at the call side. Call side you have 30,000, no minus, so there is no unwinding, and people started building open interest, right? This will get added to your outstanding. This will get added to your outstanding. So now looking at the overall, check this 10 uh, open interest and check the 10 open interest of call and put. You will get to know. So tomorrow market might be sideways to bearish. Simple, because you have huge open interest built up on the call side. So whenever you see the option chain, you have to see it as an option seller. For now, you try to digest it. You have to see it as an option seller, not as an option buyer. But see, the only example is, do you see option buyers holding their positions? What is option buying? Majority of the option buying they do intraday. They do not hold the position. I can give you one differentiator in terms of letting you know that you should see this option chain as a option seller, because no option buyer would be holding his trade. So then you will not see this huge number of option buyers. This you have to check it as an option seller. So check this last 10 OTM strikes and 10 OTM strikes of your put and call. You will get to know what market is going to be like, sideways to bearish tomorrow, because you have a huge built up on the call side. You have unwinding on the put side. Okay, let's jump on to the other topic. If I talk about this thing, right, anyways, I've made a video, 25 minutes video, the video what we have discussed here, right? This one, go and watch this video. I'll be putting this video in the description box. Okay, so uh now let me see, like, do we have folks still? One second. Okay, at least we have 54. Okay, I'm glad. At least I thought folks have left. I mean, see, I mean, this is the differentiator, friends. I'm going to tell you everything practical, everything practical. Okay, now what I'll do, I'll just take you to this thing. I'll take you to my slider, right? What did we discuss? One second. Okay, we, okay, where is the, one second, give me a second, friends, give me a second. Okay, sorry, give me a second. Okay, I will go to this one screenshot, right? Okay, this one. Okay, so we have discussed about what is uh, call and put, what is buy and sell, right? Then now we have discussed about open interest, we have discussed about break even, we have discussed about option chain. So these are all the basics. If you want all the advanced course, it's there in my playlist. Okay, so now let's discuss about what is in the money, or else before that, right? Let's discuss about the payoff. Let me quickly give you one quick, what do we say, differentiator about your payoff. So where are we? I'll go to, okay, and delete this. Okay, so now see, we all know what is unlimited loss, what is so formula simple. I've told you the formula, right? For buying 41,300 plus 98 is your break even. Okay, and the maximum loss and everything up, right? See, this is your pop, though the pop shows only 22% for buyer. And let's see what is a pop. That's the reason I told you, right? For option seller, you have the edge. Why it is showing 78% here? Simple, right? Now you got the differentiator, right? I mean, I've shown you everything practical. Why it is showing 78% and why this is for buyer it is showing only 22%. I've shown you because the option seller has the edge. We have seen five different market condition. For the option buyer, there is only one thing, which is quick momentum. That's it. If the market stays sideways like or downside, you will lose. For the option buyer, it requires quick momentum. Check the blue line. That's it. If this is missing, right? If this is missing, you are going to give that benefit to what? To whom? To the seller. For the seller requires sideways or right mild bullish or bearish market. It doesn't require a momentum. If the market is momentum, seller is going to lose drastically. Because look at the Greeks. What is that one? Can someone tell me what is that one friend of option buyer, and that is the enemy of option seller? Can someone give me like one word answer? What is that one Greek which is friend of option buyer and which is enemy of option seller? Quickly, friend, quickly. What is that Greek? What is the friend of buyer and what is the enemy of seller? I'm just waiting for the response. You know, right? There will be like 20 seconds delay for the live sessions. You all know, right? So whenever I'm telling, there is a 20-second lag basically. Absolutely. Shankaran has theta, right? Jay Prasad has said theta. Absolutely, friends. Yeah. Vishnu, I mean, not momentum, basically. Yeah. What, not moment. Yeah. Momentum is required, but what is the friend is theta? We all know, right? The enemy of option buyer is theta. What is that? Time. Okay. And the best friend of option seller is theta, that is time. So for option buyer, the more time you are losing, you're going more towards your loss. But for option seller, the more, see, basically, you know, right? I'll show you one example. Let's say the market made one, let's say 2%, right? Let me take an example, right? Market made a 2% upside move. Check the profit of the option buyer, right? 12,000 and 14,000. Let's talk about the T plus 0. 12,000 is the option buyer profit. Market made it 2% upside moment. What did I say? This is called the delta or the momentum. Yes, someone said momentum. Now, as a contra, if market makes, let me reset, makes a upside move of 2%, upside move of 2%, the contra, right? Let me take you to 2%. Check the loss, friends, for the option seller. Right away is into 13,000 loss, because the profit of option seller is he has to stay till the close of the expiry. He doesn't need the momentum market. We all know, right? Option seller requires a sideways market. He is a sort of tortoise basically, but the option buyers are like rabbit. Do you remember the tortoise and rabbit game? This is what I wanted to convey. Theta plays a very important role. The friend of seller is theta. Theta is nothing but your time. The enemy of option buyer is time basically. I'll tell you one example, right? I'll tell you one example. Let's say tomorrow market made 1% to move. Okay, let's say today market made a 1% of move. Your profit is 4,838. Your profit is 4,838. Let's say you have not booked your profit. You want to hold this trade for tomorrow. Let's say, stay focused, friends, stay focused. Yeah, everyone has given the right answer. Again, I'm telling you, let's say 1%. We'll take the 1% example, right? Your profit is 4,832. Okay, today, on Tuesday, we are on Tuesday. Okay, let me again check you. 1%, your profit is almost like 4,500. You want to hold this trade. You don't want to book your profit. So tomorrow at the same time, I'm manipulating the market. I'll take you to the Wednesday, right? The same 1% move we will see. Okay, this is because tomorrow is already right. So let me take to. Should I show you, right? Thursday. 1%. Okay, let me take you to Thursday at 9:15 because tomorrow is off, right? Let me take you to the 1%. Same 1%. Yeah, see, now you check. Okay, so initially you had 4,500 profit, but Thursday morning 9:15 your profit has drastically reduced to 3,070. What could be the reason? What could be the reason? Right, at 1%, right? Somewhere we are here. What could be the reason? The reason is theta, because overnight theta you have to pay whatever profit you got with your naked option buying. If you're not exiting, if you're not booking your profit, the next day you have to bear the theta. It could be 1000, it could be 2000. See, let me show you the definition of theta. I'm just overing here theta. See, that's it, right? Change in your profit and loss after one day if nothing else changes. Example, theta of minus 500 rupees means you will lose 500 rupees per day, and theta of plus 500 means you will get. So that plus will be for option seller, that minus would be for the option buyer. So let's say today you got 500 profit and still you wanted to hold that. So tomorrow the market opens flat, right away your profit will be eaten up by the theta. So your profit will be next day morning when the market opens, your profit will become either zero or it will go to minus, because you have to pay the theta for the option seller. See, I cannot discuss everything in one hour of session, friends. Hope I see, though I said basics of options, but I'm telling you, like, I mean, basics and also some sort of like wrong myths about the market. Okay, so guys, tell me one thing. So now it is almost 9 p.m. So should we continue the session or should we have one more session maybe by tomorrow? Okay, so we have 46 participants. I'll just leave it to you because it's already 1 hour. So if you guys want me to continue this video, I can continue for another 30 minutes, or else if someone has some other priorities, right? If they want to enjoy the Diwali, majority of us, we can have a session tomorrow also. I think one day it's too much to digest. It's up to you. I'll just wait for your reply. And I think we need another 1 hour for sure. We need another 1 hour or 1.5 hour, because basically for all the paid members also these basics are required. Basically, that's the reason I'm making this video. Okay, Rashekar says tomorrow. Like, yeah, let's do one thing, right? Uh, yeah, I'll also share my videos also in the same description box. Right, let's say, or else we'll do one thing. We'll just continue till 9:30, friends. 9:30, we'll just give it a wind off. Okay, we have another like 26 minutes. So let's continue till 9:30, and then 9:30 we will just uh, conclude, and we will have one more session tomorrow. Okay, so we have discussed about the theta and everything. Okay, so now again let me go back to this. Right, so let's discuss about bid price and ask price. I'm not sure whether you guys know about the bid price and ask price. Let me go to uh, okay, before that, before the bid price and ask price, what we have to know is we have to know about this one. Okay, risk to reward, theta we have seen, bid price, payoff we have seen, option change, strike and premium, right? In the money, ATM and OTM, this is very important. This is very important. Okay, what I'll do, I'll clear this trade. Okay, what I'll try to do first, your market stands at 41,100. Majority of the option buyer, what they think is like, see, rather than me going for the out of the money OTM, right? So where let me show you the, I'll select 3 points, three things. I'll go for in the money, right? I'll buy, okay, 40,400. I'll buy one at the money. I'll also buy one 500 strike, right? I'll also buy one OTM. Okay, so now I'll deselect this. Now check your in the money. Okay, now check your in the money. It has unlimited profit and this has limited loss, which is 17,000. Majority of the option buyers will go for in the money with a myth saying that okay, the break even is very close. The break even is very close. So then let's go for in the money. Yes, if the market makes a move of only, let's say 0.38%, let's say 0.5%, right? Let's say 0.5%, you will get with huge profit 6,425 in the money. This is in the money, friends, 40,400, because your in the money delta will be very high. So what is delta? Right, I mean, I've already made a video also. I'll show you. Whenever the underlying instrument makes a 0.5% upside move, you will get with huge profit because you have high delta. High delta is high profit. When the market moves like 0.5%, you will get like 6,000 profit. Let me show you like 0.5%. Let's take 1%, right? To make it realistic, let's take 1%. Okay, 1% in the money is giving you 11,500 profit. All right, check the probability. Probability is 46%. Now what I'll do, I'll go for in the money, sorry, at the money, right? What your at the money will give you at a moment of 1%. Okay, this is giving you only 8,000 profit. At the in the money was giving you almost 12,000 profit. At the money is giving you only 8,000. Why? Because the delta of at the money is zero point 0.5. The delta will be like neutral. The delta of the in the money would be, depends on the strike, it will be like zero point 0.5 to 1, right? I'm talking about, and the delta of at the money is zero point 0.5. That's the reason with the 1% upside you will get only 8,000 profit. Now what I'll try to do, I'll deselect, I'll go for OTM, right? This is my OTM, right? I'll go for 1% profit, right? See, 1% is ideally okay. 1%, right? Let me take you 1%. So you are at a loss of 104. You're getting the difference because you took the OTM. What is the delta of the OTM? It will be like from 5 to minus 0. From 5 to 0 basically, right? Even though the market has made a 1% move, but still you are seeing loss in your OTM strike, right? This is good. Everyone will say that, yeah, because I would rather say you go for OTM. I'll show you now the other thing. Okay, let's say the market has fallen down by 1%. Let's say, right, market went down by 1%. Your OTM will give you a loss of 1,000. This is the catch point. Everyone will think from a gambler perspective. They will think only about the profit. That's the reason they go for in the money option buying. That's a deadly combination. I can talk 1 hour on the in the money options also, but let me try. I'll take the other way. Market went down by 1%. Your OTM will give you a loss of only 1,000, which is acceptable, which majority of the option buyers will be able to digest it. I'll deselect this. I'll go for at the money. What will happen if the market makes a 1% move? Right? Your loss is straight away 5,500. Your loss in the OTM was only 1,000. Your loss in the at the money is almost like 5,445. And needless to say, if you go for in the money, this is, if you go for 1% downside movement, your loss is almost like 10,000. So whenever someone goes for the in the money, they don't even have this thought process. Yes, in the money, your break even is absolutely there. If the market goes up, you will get good profit. You will get huge profit because the delta is high of the in the money. But no one thinks that the same delta can kill your, can make, can show your maximum loss. See, let's take 2%, right? If the market goes by 2%, you are almost at your maximum loss of 17,000 on the same day. That's the disadvantage of going for in the money. Yes, if someone is very good at price action, if he is able to get the quick moment of the market, they can go for the in the money. But if someone is very bad at price action, if you're not even able to get the view of the market, if you're not able to get the direction of the market, if you're not able to get that momentum, so don't even think about in the money. Don't even think about the at the money. At least play safe. Go for OTM. Go for OTM if you're not good at price action. Check the probability. Though your probability is low in the OTM, but your loss is also low. Though you have like unlimited profit, but it all depends. Your break even will increase. Your break even is how much? 1.02%. your profit will start in the OTM. But whereas in at the money, your profit will start only from 0.23% move up. That's it. Your break even is very close. You are in the money, your break even is almost there. Rather, I would say minus. Even if the market expires here, you'll be getting good profit. Even if the market makes just a 0.14%, you'll be getting 2,400 profit on a capital of just 17,000. So this all depends on the view of the market. You got my point, right? So as a conservative trader, at least target for OTM. This is what I can say. And the other thing is, like, I'll show you one thing, right? No one even knows that you will end up into liquidity issues. Check this. If check the liquidity issues between the bid and the ask price. Even this I wanted to cover. This is one of the very important topic, friend. Everyone will miss out. These are all the basics because I'm just explaining you my experience. Okay, check this, right? Your bid and ask, there is a difference of almost how much, like 13 rupees. You will end up into liquidity issues in the money, right? Even though when you execute, you're planning to buy at 677, someone is able to sell at 690. There is huge liquidity issue and huge, what do we say? So there is only the quantity, only one quantity, and huge bid and ask price difference. Let me show you what is the bid and ask price for the at the money. Yeah, this is like 225 less, right? 17 and 25, maybe 7 to 8 rupees. You have some good liquidity. See, check the liquidity. You have some good liquidity, and there is not much huge difference between the bid and ask, though you have the difference. But check the OTM. This is the beauty. You will have good. I'm not sure whether why this is showing, right? You will hardly have the difference. See, 44 rupees and 48 rupees, just 2 to 3 rupees of difference you will have. And we are checking this for the what? We are checking this for this expiry 27. So maybe that's the reason it is not showing. But you need to know the bid and ask price between your in the money, at the money. This is your in the money, this is your at the money, and this is your OTM. So this would help you in terms of deploying your trades logically. You should not ever go for in the money. Yes, there are like few traders. If you're good at momentum, getting up the momentum, you can go for the in the money. But other than that, it can it's a dual sword, this thing, right? It can give you good profit, it can eat up your profit in case if the market goes down because of only one thing. What is that? And let me show you, if sensible shows, because of only one thing, right? That comes your delta. Let me show you the Greeks. Check the delta here, right? Delta is I, because it is not showing the right this thing. Let me show you in option chain. Let me show you in option chain. Where are we? Okay, where is the okay, check this, right? Your delta, where is delta? Where is delta? Do we see the delta in the option chain? I'm not sure. Where is delta here? I don't see the delta actually. Okay, let me take you to sensible. Let me take you to option chain. Okay, see, check the delta. Do we see the delta? Yeah, delta. See, what did I say? At the money, 17,650 as 0.51. As and when you go to OTM, your delta will keep decreasing. See, 0.39393. What did I say? It will go to zero. And if you look at the in the money, this will keep on increasing. This is one of the killer for in the money. Yes, it can give you huge profit, but it can give you huge losses also in case if your view goes wrong, because this delta is right. Right. So that's the reason. So delta of the OTMs are very less. So even though you see, let's say you went long for 17,900, even if the market keeps going down, right, you'll not get into huge losses because delta is low. You got my point. So we have discussed about this thing also. So another like 10 minutes we will discuss. So we have discussed about in the money. We have discussed about what do we say? Your OTM and the in the money. So I mean I can talk for like hours and hours on each topic, but I'm just telling you a very high level. And also I'll be sharing you all the videos, friends, so you can just watch all those videos. Okay, let me again take you to the screenshot. So we have discussed about open interest, we have discussed about theta, bid and ask price. This is very 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 important in bid and ask price. Whenever you go for any strategy, you have to ensure that, let's say you're going for 4 leg strategy, let's say 4 leg strategy, Let's say you have a good bid and ask price for one leg, two leg, three leg. The fourth leg, if it has like 20 rupees difference, so your entire trade will go into loss on the day of deployment. I've seen like many times. So that's the reason what you have to do is like, let me, someone asked me, right, what is the advantage of sensible? Let me show you the advantage of sensible. Someone asked me, right, what I'll do, I'll deploy iron fly. Okay, what I'll do, see, basically I'll deploy the iron fly. I don't need to execute all the legs. I'll say trade all. The moment I say trade all, it will take me to the other window. Okay, this will take. So what I'll do before placing the all the orders, I'll just check the quickly bid and ask price. Okay, I'll see 29.33. Right, okay, two rupees, right? 175, 165. See, there is a huge difference, 10 rupees difference. Right, again I'll say 55, 55. This is fine. This is what 218, 224, right? So this has huge 10 rupees difference. So what I'll do, either I'll wait or else I'll go for limit order. If I'm okay with the bid and ask price, I'll just go here, I'll click on market, I'll say place all the orders at the market price. If not, I'll wait or else I'll go for limit order. For this I'll go for limit, for this I'll go for market, for this I'll go for limit, and for this I'll go for market. That's it. So I'll click on place order. See, even if I click on place order, right, this will get rejected because we are doing it after the market hour. See, that's it. Okay, so now, or else you can just go with place all the orders. This is the beauty of sensible. Someone asked me, Opstra will not help you. Opstra will not help you in terms of placing the orders. I can just go by. Again, I'll show you. Simple. You have to just leave this. You have to just go do the analysis. If you're okay with the strategy, reset. You have something called reset price. This is the beauty. This will get the real-time data. Let's say you've deployed the trade. You're doing some sort of analysis, and after 5 or 10 minutes, you want to see the live price, right? You have to just because every 5 minutes the premium changes. You have to just click on the reset price. This all the prices will change. You have to just trade all, right? It will take you to the next page within a fraction of second. If you want to go for place all orders, go for place all orders. That's it. Everything will get rejected because we are doing post offline hours, right? This is the way your sensible will help you, right, in terms of doing the quick analysis, and also in terms of placing the orders. Yes, I am partnered with sensible, but I'm not trying to promote them, but I'm just trying to show you this will make your job easy. But if someone is doing all the analysis in the Opstra, if you want to come and place orders in Zerodha, right, it will take some time, but this will give you that quick reference. Okay, so we have another 12 minutes, friends. We have another 12 minutes. Let me check if I can cover any other strike. Yeah, strike and premium selections we have seen, right? So basically, when I say strike and premium, it's end of the day you are in the money or at the money or out of the money, right? I've shown you everything practical, right? Max profit, max loss, you guys have to do that. See, I've shown you 100 times. POP we have covered, we have seen bid and risk to reward. Okay, so risk to reward, I mean, I do not like the feature of risk to reward in sensible, because it shows 0.68. What should I understand, right? Even I have given them one enhancement saying that show me like 1 is to 3, right? What is my risk to reward, right? I lose 1 rupee, I'll get 3 rupees, right? If I want to convert my risk to reward, I have to do it manually. So what I have to do, I have to just copy this. This is one of the feature. I don't know why they wanted to go for this thing, right? What I wanted to do is like, for me to calculate, I'll do profit divided by this loss, right? Just to get the risk to reward. Okay, divided by this thing. So now I'll get almost like maybe 1 is to 1.4 is my risk to reward. So I lose 1 rupee. I'll lose 1 rupee. If I get the profit, it will be like 1.4. But I'm not sure like why they're given like 0.68. I mean, this is difficult for me to understand. All right, and this will show your see, this is very important, right? This will show your margin available. I mean, right, though say I'm sharing all because this is my smaller account. Basically, whatever experiments I want to do, I'll be doing it my smaller account. So starting from tomorrow or from Monday, I'm coming up with my bigger account capital. So even I'll try to show all the whatever trade something from my bigger account, right? This is your margin needed, right? For this trade you need this margin needed, and this is the funds needed, right? This is your POP, projected return, how much of return you can expect. Okay, uh, right, this is the way you can see your bid and ask price. You calculate the maximum profit and loss, Okay, go to profit and loss. Well, this will show you, right? Greeks is very important. Let's cover this Greeks tomorrow in the next session. Okay, guys, I'm done with the session. So another 10 minutes to answer any Q&A questions. Okay, so I'm looking at the Q&A sessions now. Can you explain the difference between funds needed and margin? Yeah, that's a good question. Yeah, funds needed and funds. What is that? Funds needed and margin needed. Yeah, even at times I get confused with this thing. So maybe basically what so you know that brokers will try to block some of the amount, right, just to avoid all those margin penalty and everything. So what they do is like, though the margin needed is 47,338, maybe by advance the brokers are going to block like 10,000 based on single lot, so that we never get into that margin penalty. But ideally what I do is like, whenever I calculate the profit and loss, I will calculate on 47,238. But I've not gone into that detail whether literally is it blocking my 47,000 or is it blocking 56,000. So that's a good question. So even tomorrow I'll see. Okay, Vimal is asking, what if both prices and the OI increase and decreasing simultaneously? What if both price and yeah, OI increasing or decreasing simultaneously? That could be see, you know, right? The premiums. I mean, see, basically no one can crack the premium calculation. See, the premium calculation, right? So whenever you say the market, the premium calculation is based on multiple parameters, right? One thing could be your interest rate. We call it as RO, right? Your strike, your spot, your VIX plays a very important role. VIX plays a very important role, and there are like so many parameters. So based on that, the price gets. So that's what I'm telling you. Whenever you do the adjustments, right? At times we see that whenever we have deployed a non-directional trade, even though the market is non-directional, the market is sideways, we still do not see the profit. Suddenly we see that after 1 hour we see the profit getting increased because we do not get the decay in the premiums. We no one knows, right, how that algorithm works in terms of premium getting increased or premium getting decreased. No one knows. It happens. There are like multiple. What I got to know is like there is a pure algorithm. So there are like hundreds and two hundreds of parameters involved into calculating the premiums. Okay, is register available? I'm not sure what is that register available. OI hidden is new feature on way of chat. Yeah, I mean, see, we are not discussing those sensible. Any questions on basics of options? We have another 8 minutes. I can just uh, answer like Q&A, and then we will just wind it off. And guys, if you like the video, right, please do not hesitate to like the video, right? It takes 1 second for you to just go and like the video, and you guys can just comment it also. And how was the session basically? See, I do not have the fancy PPT, no theory. Everything I've shown you practically. If someone is not happy with the content, watch it one more time. So maybe if you're not able to digest it on the day one, watch it one time, two time. Because even I used to watch all the videos 10 times. So then I got into the situation. I'm not telling that I'm a super successful trader, but basically I watched all the videos like 5 times, 6 times, 7 times, 8 times. Every time I used to take the notes. Without documentation, without notes, you are not going to get success. You have to have your own notes, wherein you should have by this times hundreds and 200 pages of documentation. Believe me, I said hundreds and 200 pages of documentation. Later, you will not even require those notes. I have done that. I have done that, right? Hundreds, I mean, believe me, there are like 300 to 400 pages of documents also. I've done it in the Word document on the hard notes, and then I don't even need all those notes now because everything is into my brain now. That's it. Because I have been kept doing all the practice over this. Registration continues. Yes, see, unless and until you see the registration open, it's continuation. Because I mean, I'm just looking out for 5 or 10. The moment you see that registration got, if I've hidden it, so you think that the registration is completed. So then you guys have to wait for the second batch, which will start after 2 months. Okay, what if you both price and OI decreasing? What it is called in terms of, see, that will talk women, that's a what do we say, right? Complicated question actually. We will discuss in the paid part, right? Yeah, see, you have to answer that, right? Take a book and pen just based on the video what I'll be sharing, right? So now you know what is unwinding, you know what is call writing. Simple. Put everything in the tabular format. You have to get with. If you see the open interest is increasing and the premiums are coming down, that is typically your writing. It could be call writing, it could be your put writing. If you see the open interest is decreasing and the price is increasing, So now I've just given you four column, four row table. Right? You can create another four. That's a good question, Vimal. You can create one more tabular format wherein you have to say that OI is increasing, the price is also increasing. Yeah, that's a good combination. So now you have to answer that. Is it bearish or is it bullish? Okay. Other questions, Sunil Kumar. So I think no questions. So can we conclude the session? We have another 5 minutes. If someone has any question, I'll be answering that. So maybe tomorrow we'll have one more session on the basics of options. I'll try to show you like other myths of the market basics, right? And then we are good to start with the paid program. So I don't want anyone to again come up with a thought process saying that what is PE buy, what is CE buy, what is PE sell, what is CE sell, what is this maximum profit, maximum loss, what is POP, how to calculate the break even. Okay, what is a strike selection, in the money, out of the money, bid price, ask price. So this is what I wanted to convey in this video. Okay, so no more questions. I think we are good to close the sessions. Another 4 minutes. Anyone, either you guys have understood or else you guys have not understood because I'm not getting more questions. But how was the session, friends? Tell me one thing. How was the session? Is it good, bad, too complicated? Because I don't believe in theory. I believe only on practical. Yeah, tomorrow's session. See, basically, you know that I'm not a full-time trader. Today is holiday for me. That's the reason I've done. So maybe tomorrow we can have post 9 p.m. Right, 9 p.m. to 10 p.m. Right, it's a good time basically, right? I mean, even I will have more time. If people were not able to join also, you can watch the recorded session. So tomorrow I'll try to have that session at 9 to 10 o'clock. Will that work? Even if it is not working, so maybe you guys can watch the recorded session. I'm just planning to come up with like more sessions until we start our main paid course. Okay, at least can someone say like how was the session? No one is telling, at least nice, good, bad. This was, I mean, did you like the practical content? I could have shown you one PPT saying that this, if this happens, this will come down. I could have shown you, but I've shown you everything practical. And this is with the one short frame. Right? Try to do one session from your end, you'll get to know. Right, everyone, because that's the reason I create this. What do we say? This PPT, not PPT, the presentation, so that I do not end up forgetting. Right, we have discussed about delta. So tomorrow we'll just go in detail. Right, we will try to cover more of option chain. We'll try to cover more of delta. We'll try to cover VIX. We will try to cover delta. We will try to cover what is theta, open interest, and we'll try to make it more structured tomorrow. But today it was more of I would not say basics, but I would say more of practical approach. Great. Okay, at least you guys have enjoyed the session. Chalo guys, I think even I'm feeling hungry. Okay, so thank you for watching this session. Right. So let's connect tomorrow at 9 p.m. 9 p.m. to 10 p.m. or 9 p.m. to 11 p.m. Okay, see, if you want to become a successful trader, if you want to become a, so sorry to say successful, if you want to become a smart trader, you have to come out of your comfort zone. Don't say that I have to spend some time with my family. Don't say I have to watch cricket match. Don't say I have to go for early sleep. If you have that kind of attitude, you will never become a smart trader. You have to come out of your comfort zone. That's it. You have to, seriously I'm telling, there should not be end for learning. Even though, see, it's only been 6 months. Even though if you take a successful trader, you recollect one successful trader, for him it's a daily learning for him. There is no stop on the learning. You have to come out of the comfort zone. If someone says that is my sleep time, I will be not able to help you. You have to come out of the comfort zone. If you guys need, I can make a video. I'll take a poll. I can make a video from morning 7 to 8 or 8 to 9, because I know, right? I mean, majority of the folks are like gambler. The moment the market starts, you'll just go to the market, you'll do unnecessary adjustment, everything. If the best time would be, ideally, the best time would be 9 to 10 would be the best time for me to do the sessions, because at least you'll end up not doing unnecessary adjustments in the market. I know the moment the market starts, you guys will get into panic mode. Should I do reverse buying? Should I buy this? Should I sell this? I mean, that's the reason you are creating mess of yourself. Guys, that's what, attend my paid training. I'll be giving you that hand holding. You guys will love that, actually, how to do the adjustments very with peace of mind. That's where the contra trades comes into picture. The contra will take care about from 9:15 till 9 10 o'clock. Your contra trade will be taking care about your maximum loss. All right. Yeah. Tomorrow we will discuss about candles. Yeah, that's a good point. Candlestick pattern. We will discuss about open. Yeah, that's a good point. Right. Tomorrow we'll discuss about the price action also. If we have time, we will discuss about the price action. Let's start with the basics of price action. I am there for you, but I want you guys to prepare, especially for all the paid members. Do not ignore all the basics. And also this video I've made it free for everyone. I'll be just going to have this recorded session. You guys can enjoy. Okay guys, it's already 1 hour 30 minutes. Okay, thank you for joining my sessions. So let's meet tomorrow at 9 p.m. Right, the topic would be some advanced topics about the options, right? Your this thing, and then if required we'll talk about the price action tomorrow. All right, thank you friends. Good night, have a good night.